I think the best investment ideas in the last 30 years,
Mm-hmm.
they're dominant digital monopolies that everybody needs, nobody can stop,
Mm-hmm.
and very few people understand.
Right.
And Amazon was like that.
Mm-hmm.
Apple is like that.
Right.
Google is like that. Facebook is kind of like that. And Bitcoin is like that.
Yes.
They
Yes.
all have the same characteristic. Few people understand it. When few people understand it, but everybody needs it and no one can stop it, that's when to invest.
Cryptocurrency prices are fluctuating as the volatility in the recent weeks continues. The volatility has come during a broader market sell-off driven by investors readjusting their portfolios to account for a more aggressive Fed, which is now expected to raise rates as many as 7 times this year as it fights surging inflation. The Bitcoin narrative could be further tested as investors monitor tense developments between Ukraine and Russia and weigh the possibility of the Federal Reserve hiking interest rates by 50 basis points, or 0.5 percentage points, in March. Recently, MicroStrategy CEO Michael Saylor gave an update about current market volatility and Bitcoin price fluctuations. Hello and welcome to Money Talks. In today's video, Michael Saylor lays out why Bitcoin beats property as a store of value and what crypto going mainstream would look like. Also, Saylor gives an updated price prediction for Bitcoin at the end of this video. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
You know, from the point that I had money to invest, which is after my company came public in '98, I had investments in tech companies, but I got to be pretty heavily invested around between 2008 and 2010.
Wow. Wow.
When I wrote The Mobile Wave, I saw that the world was going to transform into companies with 1 billion customers like Amazon and Facebook and Google and Apple. And I thought, if you can have a digital network with 1 billion customers and you can ship a product or a service down that network via electricity, then that's an unstoppable competitive advantage.
Right.
So I concluded, Amazon was going to defeat the 10,000 smallest retailers because they had one storefront and they could upgrade their storefront instantly every minute of the day. And that's impossible for a physical bricks and mortar store to compete with.
Right.
And the same is true with Apple, where if you have a device in 1 billion people's hands and you can ship a product to it over the weekend, nobody can compete with that. No one else can ship a product to 1 billion people over the weekend for a nickel. And so those are pretty unstoppable franchises at that point.
Although, the largest cryptocurrency by market capital, Bitcoin, has long been regarded by early investors and enthusiasts as a safe haven asset, one that ideally could offset risk in investors' portfolios and limit exposure to negative shocks. However, in recent months, Bitcoin has been trading like equities, specifically like riskier growth-oriented stocks. It's still recovering from a big drop from earlier in the year, when rising rates led investors to shed positions in tech and other risky assets. Speaking about it, Michael Saylor shares his thoughts on Bitcoin and its journey through the years.
Right.
You could say today that everybody kind of understands that they need Apple and Google and Facebook and YouTube and Amazon. They understand it today. And so those aren't so good investments anymore, because once a few 100 million people agree with you, you're not early. So people disagreed on Apple and Amazon a decade ago, and they were good investments, and they went up by a factor of 20 from there.
Wow.
And people disagree on Bitcoin today, which is why it's a good investment.
Right.
Because if all of the issues were worked out, then it would already be 30, 40, 50 times more expensive.
Wow.
And it wouldn't be controversial, but you would lose 97% of your wealth.
Michael Saylor talks about the difference between an investor and a speculator. Saylor thinks that if you're going to buy any long-dated asset, but especially if you're going to buy property, and if you're going to buy Bitcoin, if you wouldn't hold it for a decade, you shouldn't hold it for 10 minutes. because the inability to store your economic energy in the form of property or money over time is an economic death sentence.
Well, first of all, the question really is, are you investing or are you saving or are you speculating?
Right.
If you're a saver, you're not really investing or taking a risk on a company. You're converting a weak property to a strong property.
Right.
If you're an investor, you have to have at least a 4-year time horizon.
4 years.
Okay. If you're investing in something thinking you'll make money in 4 weeks, you're not really an investor, you're a speculator. Now, if you don't know what you're doing and you're guessing, you're just guessing, you're just betting on black or red, I call that speculation.
Okay.
If you have a methodology, if you have computer programs and you have proprietary algorithms and you have special information that no one else has, you can call yourself a trader. Right? Maybe you're a trader, but either way, you're a trader or you're a speculator, but you're not really an investor. Because if you're an investor, you have a thesis that's going to take years to play out. So I would say that if you're looking at something as an investor and you're not going to hold it for 4 years, you're just speculating, you're gambling over whether the EPS will beat the numbers that the street expects next Tuesday, right? And nobody knows. It's coin flip. When you're buying Bitcoin, if you understand it, I don't think you're investing and I don't think you're speculating. I think you're saving. And if you're saving, you're thinking, I'm going to buy it for a decade. And what I would say to people is, if you're not going to hold it for a decade, for 10 years, I wouldn't even hold it for 10 minutes. I think the right way to think of it is, if there's money you need in the next 12 months, you probably should store it in a currency, like a stable currency.
According to Saylor, the MicroStrategy firm will continue to buy Bitcoins as part of its strategy. It executed its most recent purchase using free cash flow rather than issuing debt or equity as it has in the past. The firm generated $90 million in cash flow this year, which Saylor said will also be used to pay the debt service. The remainder, he said, will go into Bitcoin.
If I live in Korea and I have rent coming due in Korean won, then I would hold some cash balances in Korean won.
Right.
If I have money that I wish to save and give to my grandchildren, 10 to 30 years out, or even 100 years out, I want to keep it in my family, then you should be putting it into a portfolio of property, scarce desirable assets. So property, what is it? Bitcoin is digital property. Otherwise, buy the most valuable land, or you might buy trophy collectibles. Very, Leonardo da Vinci paintings, Picasso, something that is rare and desirable and scarce. If you buy a portfolio of property that is, it's not a company, it's not a currency, it's something that affluent people will find desirable in 10 to 30 years, then that's a saving strategy. If you wish to take risk, if you wish to invest in companies, you're an investor.
Right.
Now you might decide that you think that Apple is undervalued or Google is going to perform well, or you might invest in a private company.
Right.
Okay, well, the advantage of those things is they generate cash flows, but the disadvantage is they have risk. So if you want to take that risk, you can, but it's not the same as owning a city block in downtown Seoul, Korea. So my answer to anybody would be, don't check the price of it every minute if you're a saver.
Right.
Saylor also gave an updated Bitcoin price prediction and how this crypto will evolve over the next few years.
Yeah, I think that Bitcoin is first going to flip gold, and when it flips gold, it should be about a $500,000 coin asset. Right. But I think Bitcoin is also going to replace bond indexes and real estate and other sorts of property investments. And I think there's no reason why it shouldn't go to $100 trillion. That would put it at 5 million a coin. So I definitely think it'll happen. Like, the question is really just over what time frame.
And that brings us to the end of today's video. What do you think about Michael Saylor's Bitcoin prediction? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.